Hey everybody, happy Tuesday, another Hot Topic Tuesday. What is it? The 24th of March, 2026 is flying by. So we're not going to waste any time. We're going to get right into it. We have a couple of speakers with us today. You didn't have to duck away on that.
I didn't want them to see the top of my head.
Your top of your head's a lot better than well, anyway. Guys, rehabilitation loans, 203Ks, and you're going to cover all the other stuff that's with that. So we've got Holley Compton from 21st Century Mortgage, one of our mortgage lending partners, along with Tom and West from Progressive Restoration.
Got it.
There was no alcohol at all today, I promise. So guys, I'm just going to turn it over. Holly, it's all yours. And
thank you so much. All right, we're going to jump into things. Thank you guys for being here today. We're going to cover a lot of different information in regards to rehabilitation loans. I hope everybody gets some great takeaways from this and you guys can use it to sell more houses, get more buyers and homes. Where do I point the clicker?
Okay, now do it.
Beautiful. Yay. Okay. So we're going to go over why this matters right now. I know Steve in the Shelby office has been talking a lot about this. Right now, with the way that the market is going, we have some buyers who maybe really want a very ready to move in home. They don't know anything about renovation loans. It sounds like a big headache to them. They aren't even considering a home that maybe needs a little bit of elbow grease. So there are buyers that are not willing to compromise. They just want to sit out and they're trying to wait for more inventory. And we know the last few years that that might not happen overnight. So to try to get more people in homes and get more closings for you guys, we're going to go over this topic today with Wes. Don't make me be the only one on the camera. All right. So we're going to go over a few things that you guys should know about this loan type. But before I jump into that, Wes is our preferred restoration company. They do all the general contracting work. So if you guys have questions on anything construction wise, we have the expert, the man, the myth, the legend here himself to go over it. So feel free to throw those questions in the chat as well. And we are going to cover what a renovation loan is. So for those that don't know, you can purchase a home and finance not only the home, but the renovation costs as well with these types of loans. The value of the home, the appraised value, it's not the current appraised value of how this home may be valued at the time of purchase. It is based on the after improved values. So we get a lot of that information from you guys as the realtors on pulling comps and CMAs and things like that on what the home would likely appraise for after those repairs or renovations are made. But there is only one closing for this transaction. There's not like a two-time close or anything like that. So there's a few different renovation loan types. We have the one everybody knows about, the 203K. It's an FHA loan. There's two types. There's a limited and standard. Limited is a type of renovation loan where there's limited things needed, limited costs that are needed. These are typically a lot, the repairs are done a lot faster. A standard is your normal 203K where there's likely more cost involved with the repairs or renovations that are needed. And those can take a little bit longer for those items to be repaired since there's obviously more work that needs to be done. We also have a Fannie Mae, so this is a conventional loan, and a Freddie Mac choice. Both of these are conventional renovation loan options. And then we do have a VA renovation loan as well. So what can be done? There's a list and I'm not going to go through all of this. We can send the presentation out after, Darwin, right? You think so?
Absolutely.
Okay. So we'll send the presentation out so you guys have all the info. But like I said, limited is for very minor repairs. So this is modernizing a bathroom, a kitchen, eliminating any health or safety issues. This is a big sticking point for FHA and VA, even conventional loans. So lead-based paint on those government ones, mold restoration, things like that can also be done on these. We need to upgrade plumbing, ACs, maybe they're outdated. That stuff can be done with this. Flooring, appliances, windows, doors, those types of things. The one that's not touched on enough, in my opinion, is the swimming pool restoration. So if you have a swimming pool that may be outdated and it needs a few things to fix up to make it more modernized, you can do that on this limited loan too. For the standard, this is where the repair costs between at least $5,000 up to $75,000. Again, this is just for the restoration or repairs. You can convert a single family home into a multi-unit with this. You can add a ADU. You can add accessibility for disabled persons. You can do painting, major landscaping, major structural additions. You need to add a basement. You need to add bedrooms. Maybe you have a family that's moving into a home and they need 4 bedrooms, but this house only has 3. They can make it work. You guys can add bedrooms, right?
Yep, absolutely.
Easy peasy. They do it all day. The work for the FHA standard, that has to be completed within 6 months. You can handle that, right?
Yep, no problem.
Perfect. Fannie Mae, so this is one of the conventional. I'm going to throw both of the conventionals up at the same time. They are very, very similar. The work has to be completed for Fannie Mae within 9 months. This is going to allow more of like the 203K standard stuff where it's more intense work that needs to be done. So again, updating, modernizing, anything plumbing, electrical, AC, heat, doing septic systems, remodeling kitchens and baths, of course, repairing termite damage. Also any moisture damage. We had that in my house that I bought. It's always fun, especially in the basement. So those things, if you notice that in homes, which we're seeing more of now, you're able to still have a solution for your buyers of, hey, I know that this is an issue now. Let's get a quote from Wes, the general contractor, see how much that would be. And let's look into maybe finding a loan that would be able to work and finance that cost in for you. You can do additions or replacements of decks, patios, porches, driveways. That's a big one. Fences are very expensive nowadays. You have a family with a dog. They don't have 16 grand to have Home Depot come out. We got Wes.
Yep.
We have renovation loans. Freddie Mac, this is another conventional option, but we'll think of this more like that 203K limited, where with this, the work has to be done within 45 days. So we're not looking to add in like additions and things like that in 45 days. We're looking for more of the easier stuff. We can still replace the exterior like patios and decks, landscaping, fences. We can do all of that, but we have 45 days to complete it. So anything needing extensive work, we would shift to the other conventional program. This is my favorite, and VA is always my favorite, no matter what. But VA renovation is something that not a lot of lenders offer. And if they do, normally they have a minimum of, or a maximum of $25,000 in repair costs. We can go up to $75,000, and we require the work to be done within 4 months. The big one with VA that I think is useful is health or safety concerns. Connecting the home to public water or sewage. Again, all of the same stuff as we mentioned before, but mold remediation, that's another big one. Gutters, downspouts, energy improvements. And then the big one also of making the home accessible for anybody with disabilities. And then there's more. All the fences, all the stuff from the other thing, but then you also have the ability to add in the appliance costs. Yes, we like the appliances. I like that. Okay, installing smoke detectors. That's not going to be a big thing. You wouldn't just use this loan for just a smoke detector, but you can add it in if you need some of these other things repaired. So the total renovation cost with all the extra cushion and the fees and everything else in cannot exceed $100,000.
Don't worry about it.
Supposed to be changing?
It is, but it did what it did. Yeah.
No worries, we're good.
Oh, perfect.
You're fine.
I'm glad I'm covering everything in detail.
And we will get it to you guys.
Yeah, we'll send the presentation out. Our TV here in this office isn't working right. Good thing everybody on the Zoom can see it. So work must be completed again within 4 months. So the process and project management. This is what Wes does. So Wes deals with the scope development, contractor coordination. Obviously, it's his people handling everything. He'll set the timeline expectations, and he'll deal with the draw process from the lender as well. So that doesn't need to have any borrower or agent involvement. With these types of loans, we normally close these within 30 days. Like maximum at the first draw is at closing. So that's when the borrower signs everything, like a normal closing on a regular purchase they're moving into, keys in hand. If the home is uninhabitable, they can also, depending on the loan program, include 6 months, up to 6 months of payments in an escrow account and finance those in, which get put in a separate escrow account if the home is uninhabitable during those repair or renovations. So that way they don't have that monthly mortgage payment quite yet that's being financed up to 6 months.
So I think everybody can hear me. Familiar with them, had never had one completed. And most time because it was the time and the process.
Mhm.
So you just blew me away when you said we close these in 30 days.
Mhm.
I hope everybody's hearing that because there's no disadvantage to a homeowner by accepting an offer with this type of loan on.
The only downside that would be different versus a traditional loan is the interest rate is anywhere from 1/8 to 0.5% higher, depending on your program. FHA and VA are 1.125 is VA, it's 0.125 higher in rate. It's like nothing. FHA is 0.375% higher in rate. Conventional is about 0.5% higher in rate. To put this in perspective, it sounds like a lot, but a $400,000 loan amount, your difference in monthly payment is less than $70 a month with the 0.5% increase in rate.
And that's with getting the additional money to improve, which means the price of the home is also going to go up because of the renovations that you did.
Correct.
I have an example of that. We like
Oh.
equity.
Yeah, yeah.
I'm glad Steve likes PowerPoints because I like putting them together. Basic process. So this is how we get to close in 30 days. We give the fully underwritten pre-approval ahead of time. We'll find the property. That's your guys' job. We'll communicate on that. Get us involved before you put an offer in, please, so we can look at the property with Wes as well. We want to make sure that this is realistic to get completed in that time frame. Upfront due diligence and communication is the name of the game. Always, but especially on these. He's going to give you that contractor bid. We'll get the appraisal done as completed value. And then we will close, and that renovation escrow then starts. He gets to work. The lender will disperse those funds accordingly to their draw schedule, depending on the program.
Go on if you can.
It won't let me click. You're touching.
Because I'm
It's
touching
on
it.
it, yeah.
I don't think our speaker's gonna work is the issue. So we got a question. Let's Karen Thomas, see if we can hear her. Hey Karen, go ahead. Let's see if we can hear you here.
Okay, can you hear me?
Okay, hold on a second. It's an issue on my side.
We could disconnect from the TV technically.
Yeah,
Yeah.
yeah, without screwing anything else up. Give us a second here, guys.
Keeps the light on.
Hey Karen, go ahead and try again.
Okay, can you hear me now?
Not yet. Speakers, let's go with this. How about now, Karen?
I can hear you. Can you
There
hear
we
me?
go. All right, we got you.
Let me say it was up.
Okay, perfect. So, just a couple questions. It seems since the clock starts ticking at closing, this is not a situation where you would allow the seller to have occupancy after closing?
Correct.
Okay, and then here's the what if, and of course, you get this by watching HGTV. There's always, the property brothers always find something they weren't expecting. What
Yes.
happens if you exceed, or it looks like you're going to exceed the timeline?
So exceeding the timeline, generally, I mean, how often does
Generally-
that happen?
Not very often.
If it does happen, the contractor would work with the lender. It's already closed. So they're going to work together to find a solution to get things done at least enough. Everything doesn't need to be fully completed. They will let some things slide as long as they aren't health or safety issues or prohibiting the family from living in the home.
Okay, perfect.
The other thing, you had another part of that question, and I'm so sorry. I got really excited and forgot to answer it.
That was the part about if there was a lot of times right now the sellers want occupancy. So if you only have a certain amount of time, obviously
Yeah,
that can't work.
so correct. With that, they won't allow any additional occupancy. However, the other part of your question, I just remembered it. My apologies. Was if things come up and it's going to cost more money. The lender prepares that ahead of time. So we'll have a contingency fund that's added to that loan amount of either 10 or 15%, depending on the loan amount. Or depending on the contractor bid, that they will basically cushion that loan amount with, just in case there is the unexpected repairs
Okay.
cost.
All right. Great. Thank you.
Perfect. You are welcome. I think I'm gonna get to the part that I was looking for you, Darwin, thanks. You can be my clicker. Yeah, here's my
Yes.
example. So you guys take a buyer out to look at a home. Sales price is 200. You put an offer in right at the 200. Wes says renovation for everything that you need done is gonna cost 50 grand. Appraiser goes out to the home and they say, hey, the after repair value of this home is 275. What does that mean for your borrower, for our buyer, for our client? They have $25,000 of equity in that property. Because it's worth 275, they're paying 200 for it, but getting a loan to cover the 250,000. So here's some different talking points for you guys. This home qualifies for renovation financing. You don't like the cabinets, you don't like the flooring. You're being very picky because you're looking for a needle in a haystack, as Steve always says. That is true. That's how I was when I was looking for a home. You can customize instead of compete. Do you want to compete with other buyers, putting in offers? Do you want to compete on looking at homes that are 1 in a million, that needle in the haystack? So does everybody else that's out pre-approved right now. Instead, you can customize it how you want. You could talk to Wes. He'll take you through some different plans. He'll make it exactly how you want it. You could do it yourself, pick everything out yourself. We can finance updates into the loan. That's not a common thing. Buyers don't really think about this. They aren't really aware that there are these types of loan programs. So as you, the agent, being able to take them under your wing and say, hey, I know what you want. However, this home has all of these things. I know you want to update X, Y, and Z. Let's take a look with a lender and get you with Wes and figure out if we can finance those updates that you need into the loan.
So these talking points, is that something that we could consider as a listing agent? Is what we're saying with this then?
Absolutely.
Is it Wes getting you involved in advance or?
Yes,
Yep.
for sure.
So how would that part work of it? So if we're selling a house, the listing agent, would we reach out to you first or?
Yes.
Yes. So once you guys know what you're looking for and you kind of get into that listing, what we would need is the listing with all the pictures and dimensions, and we need to know what you want to do to that house. So for us, we can't, if you can imagine us trying to get to every house you're going to, it's very difficult, but from doing it so long, we kind of know what a bathroom costs, $15,000 to $20,000. We know what the square footage is on a flooring. We can do the calculations. So when you get it to us, the listing and everything you want to do, we actually will calculate that within a couple of days normally. So we can turn it over to the lender immediately, and then they'll decide if it makes sense to do the actual, if they can do it with the loan based on the value and what it's going to be worth when we're done with it.
Yep.
Simple
So really,
as
we would get in touch with the two of you to even be able to say this house qualifies
Yep.
for a renovation loan.
Yep.
Yep.
Or if you just get in touch with one of us, that way it's less work on you guys, we can facilitate the communication
Correct.
between us and then get back with you with the end result that you're looking for. So you're not playing telephone. I saw a question come up in the chat too, which is right on par with kind of what we're talking about. The buyer's pre-approval would include the renovation financing, yes, because what we're going to do is we're going to pre-approve them based on their maximum loan amount that they could get with their current income.
yes, you definitely need that.
Yes,
So we can,
no surprises.
Yes.
We don't like those ever. Keeping the train moving. We are finished, but we really want to keep the floor open for questions. I know that this isn't something that you guys are running into every day. So if you have questions, feel free to ask now or reach out to us after.
I'll start now. because it normally takes them a while to get going. But if I'm working with a buyer, I now have a wider inventory of homes to be able to look at. There's no, again, doesn't appear to be any real disadvantage to the seller. So with a buyer, they should actually get with you then first to even consider this as an option.
Yes, absolutely.
If we were to send somebody to you, how would this, I mean, is this a program you would suggest? Would you guide? How do you know whether or not to even talk to them about a renovation loan?
One of the first questions we always ask when we have a buyer contact us is, what type of homes are you looking at? Give me some examples. Is there anything that you're seeing? A lot of the times these people are already looking on Zillow because they get really excited, and that part is the fun part of home shopping. So we're able to gauge from their examples that they've sent us. But it's part of what we talk about, because we don't just talk about what they would qualify for. We try to educate them on all the different programs that are available from a 30,000-foot view, not information dump, but try to let them know, hey, you can look this route, or this route. You can pick.
And now this is something, and that was the part, again, when you hit the 30 days, I'm going,
Yeah.
well, Maynard, this just opens it up for everything at this point. Because there is no additional delay. And a part of it is because, Wes, you're getting out there first thing.
Yeah.
Correct. As soon as we close, we'll have some money down. We'll get in there and start the renovation and make it as smooth as possible.
Go out, is your part going out like once we find the home? Or does all this happen after?
So what I need is the listing so we can actually get an idea. So it's very important. We'll have to put something together for you guys for the realtor side. You want to make sure as a realtor, there's enough money to get a renovation loan. That's important. Otherwise, we're going to be spinning wheels and we're not getting anywhere. So make sure it's that house that needs some stuff done. You might just want a floor in there. You might want a fresh coat of paint. But we got to make sure that there is going to be enough money in there for the financing to go through. So there's a little bit of equity left.
Yeah, so
whatever
if,
that
if,
ratio
if
is.
somebody's pre-approved for 200,000, they aren't magically going to get a loan for 200,000 plus 50,000 for
Correct.
repairs. So a lot of it you can kind of math in your head, but still let us know, just so we can run everything through the underwriting system and make sure we're good to go up front.
Makes a lot
We had
of
another
sense.
question. John,
And then Wes, so like you said, you wanted pictures of square footage. So like say they wanted to redo the kitchen. Would you just need like length and width, height of ceiling, how many cabinets, or?
Pretty much.
And
And
You might want to repeat just in case. I don't know that they could hear that question.
so John is asking, would you want just dimensions on the kitchen, for example, when you go in and you want to remodel that? So what we need is just a great picture of that. If it's a bigger kitchen, yeah, we might ask for a couple dimensions. But again, being in the business so long, we have a really good idea what that kitchen's going to run. The most important part, John, would be what quality and how far we're going to go with that. Because a kitchen can go from 10, 15,000 to 100,000. That's going to be a tough one. A kitchen is a good one because it depends on what they want. So we got to be a little clear on that. So I think we need to help with some of our marketing for you guys out in the field, so you kind of know how to walk with that customer and push them toward the things that they need to do or want to do, and if they can do it or not. The most important part is the number up front. Like you said, $200,000, you're not going to get it for 250 when it's only worth 200. So you really got to be upfront on that.
yeah. My contacts are moving. Can you read that one?
Would the contractor review be part of the private inspection?
So we still normally, you guys would use your regular inspectors for that. We wouldn't be a part of that. There's a fee. They come out. They're great at that. They'll go through the house. And so I would keep that the same. We would only be there to do the actual renovations of anything that need to be done.
Would it help you if they sent you the inspection, if they
Of
felt like it?
course, of course. That usually what we'll do in a lot of situations actually is they will give us that inspection report when it's coming down to the nitty gritty, and we may need to add some things that we didn't see. So definitely the inspector needs to walk through the home and see what else is needing to be done.
Great question.
So what about like adding a bedroom? Do you
Adding
think
a bedroom?
Adding a bedroom would fall under the cap limits for what's allowed?
So meaning like,
Say you had a small little ranch with 2 bedrooms.
yep,
It's the great house, they loved it, but they really needed that 3rd bedroom. So some of the caps were what, $100,000 rentals? would $100,000 fall
Yes.
in line? with a-
Yes, I mean, if we're adding an addition,
Yeah.
you're pushing the limits a little bit because we're doing footings or we're adding on, we're going up or however we're doing that. But if you're adding a bedroom on the existing floor plan, not a problem. That's simple. That's not that bad.
Hey, Karen, go ahead.
Yeah, so you mentioned FHA and VA. So whatever repairs come up for FHA VA requirement, those can be done after closing with this loan.
Yes, they can.
Okay.
I should have highlighted that. That's a fantastic catch.
And
Thank you.
That's a popular one, yeah.
Yes, that's the most popular reason that FHA and VA do the renovation loan, honestly.
Okay, perfect. Thank you.
They always
Yeah,
make sure
absolutely. Thank you.
those are qualified within that renovation loan. If you're adding the addition or whatever, that's first in the loan.
Yep.
You always have to do those up front where they're happy.
Yep.
Then the excess money that we have, we can go ahead and utilize that for the other options that you're looking to do.
Yep.
I have a question too.
Oh.
Yep, go ahead, Selma.
How about if the home won't appraise for the price? Like if, because I had a client for $1 million home and the appraisal come for 980 and they want to do the renovation around like changing too many things, it's gonna cost $200,000-300,000. Can they still get that kind of loan or no?
So the appraisal wouldn't just be a regular appraisal like what you see now. It would be a specific renovation appraisal where they would take into consideration everything from Wes. So they would take in his bid and his plans and then appraise the home based on after
The
the
renovation.
renovation
Correct.
value.
Okay, even if those renovation, they are not necessary, it's just cosmetic. That,
Absolutely.
okay, thank you.
Any of these happening now, but so obviously you're in it and you're doing them. Are you experiencing a lot of people taking advantage of this?
Yes, they're starting to. I feel like, as we talked, people don't know about them and they're nervous. They don't understand how they work. They don't understand where to get the contractor from. That's why we want to be a part of this and start talking about it. You have someone to go to, being us as the contractor, that can come in and give you the numbers you need. You have the lender right there with you. So it's getting more popular. That's why we want to push it more. And it's actually with the housing that's down or there's not a bunch out there for sale. This is perfect for that because now you can make it whatever you want to make it with that house that maybe is only $100,000, but when you're done, it's worth $250. You know, as long as it appraises. So the things that we want to do the things that will actually increase the value of the home. And usually there's no problem, as you know, as a lender. So
And I will say they had a lot of red tape around this before. So they did make it more difficult. And in the recent year or so, they have removed a lot of that red tape. Like before, the contractor would have to go on their own and get VA approved to be a general contractor with VA. And working with the government, as most people know, nothing is fast. And that's why a lot of people dropped the ball previously because it was pain. So now the lender takes care of all of that for us. That's why we're able to still meet those deadline dates because we're doing that up front. And then the other thing too, I want to touch on is self-help is not allowed. So you might have a handy borrower, but they cannot, even if Wes wanted to do a renovation loan for himself, we wouldn't be able to do that because he is the borrower.
correct.
My brother Wes do it for me.
Absolutely.
Wow, that's
Yep.
again, something that's different.
Yep.
Wow.
Yep.
Interesting. What type of renovations have you seen, Wes, that would make the most sense?
So bathrooms are big, adding a room, that's always good because you may have a house that's in an area that is not appraising properly because of the square footage. So you add up or add out, that helps out tremendously with the value and you get what you want. Kitchens are great. Just updating the main stuff that you guys normally would do or see.
So like a roof, driveway, those are great, but they don't necessarily add value like a kitchen or a bathroom.
How do you take that as the lender? So obviously a new roof is always good on the insurance side, but is that an upgrade in your world?
It depends on the market and it depends on the appraiser, which we don't like those answers, but that is the
Right.
reality of it.
Appraisal costs 15 grand. I doubt the appraiser, if the roof costs 15.
The appraiser
grand,
isn't gonna add
they're
50
not gonna add
grand.
15 grand.
No.
Right.
Depending upon the condition of the roof. I mean, if it's
Oh,
leaking.
yeah.
True.
If it's falling in.
It's leaking,
Yes.
falling in, then it's
And there are
different.
some where
That is
they're
different.
leaking.
Yeah, if you
Yes.
have a tarp on it,
Yeah.
Yep.
it
That
could,
makes- Yeah.
The blue roof.
yes.
Those are popular too, right?
I have another question.
Hit it, Selma.
Are you
Go.
working with just certain contractor or do they need a special license or how does it work? It's just Wes is the only one you are working with or they are another contract? Because sometimes
another
clients they
contract-
have a favorite contractor they want to work with.
Oh, you can, so the contractor just has to obviously be a licensed contractor. So if you don't want to work with Wes, I will be sad and he will be sad, but it can still work.
But they have to be approved, and one of the things that
Yep.
why we're pushing this and what scares other contractors, and not all of them, there's guys like us. You can actually search it. We were searching it. There's only a few, believe it or not, that have the 203K.
Yep.
There's a lot of paperwork on our end of it. So our team in the office is able to streamline that to go quickly to get this loan done.
Yep.
A lot of guys don't want to deal with that. They want to have one bottom line number over to the homeowner and they want to move on. They don't want to go through all that red tape, as you said,
Mhm.
to get to that. So,
There's just a lot of contractors that only
Yes.
like to work on commercial properties too and do the bigger jobs.
correct.
Okay, thank you.
Yeah,
Holly, quick question.
yes.
Can you scroll back to the basic process page again? Maybe I missed it.
Nope, I think I'm going the wrong
So-
way.
So I guess, while you're getting there, I guess I just was wondering, I wanted to make sure I understood because that example you put there is, looks like a very typical first-time home buyer. And as we all know, they all want, I even go further, I call it the unicorn in the haystack.
I like that. I'm gonna steal that.
They all want, the $250,000 house for, 190, right? So, that's a really perfect example, probably for a lot of us with first-time buyers. But so I see the flow there, the pre-approval, find the property, contractor bid. Where does actually submitting the offer flow into that? You might have said, but I probably just missed it.
Between the contractor bid and the appraisal.
Okay.
So
'Cause
we're
I-
gonna want to know ahead of time what the bottom dollar would look like for Wes and his team to complete everything before we put an offer in. Because if we're like, this is gonna only cost 20,000, you're pre-approved for 220, the home plus the 20,000 renovation, and he comes back and he's like, actually, it's 30,000, we'd be dead in the water.
Correct.
Okay, that makes sense. I was kind of assuming that's where it was, but I just wanted to be
I should
clear.
have put that on there.
Yeah.
That's
that
okay.
makes sense.
Thank you.
Of course.
Something for the sellers.
Hi, I have a question too, and I may have missed it as well. Is this program available to, say, an investor who has already purchased a home but wants to renovate?
So there are a couple of products that are available to investors. Those would fall under the conventional side.
We had one.
We have, which
2
we
years
really
ago.
have one that would work because I'm sure that if the work needs to be done, it's probably going to take longer than 45 days. So it would need to be the Fannie Mae program. But yes, we do have one. And they've only done one of those.
I've done one in that program, which was similar. It was a 203K. He had to live, or he had to be moving in for 6 months or 12 months.
12
So that was
months.
a
That's
great-
an
that's a great
FHA rule
que-
though.
Okay, so that's
But
a
on
good question.
conventional,
You can make that happen.
you can do investment.
Okay.
And then I know there's a
Okay.
question in the chat. Do we have something for sellers? A lot only accept cash or conventional terms. I can get flyers out all day and I can co-brand things with Wes. You just reach out to me and tell me exactly what you need and I can make it pretty quickly.
Condos.
Yes, some of these programs are open for condos, but it just depends on the specific program.
And then we've got, went on a listing appointment yesterday, beautifully renovated. They've got a bathroom that's not finished. Could you help with this?
Of course, we can help with this. Yes. Can
We
you
can help with
can
it
you help
too.
with too?
Of course we can, yes.
So, and a seller, you're gonna be able to help them one way or another. It might not be this program,
Right.
but you got a way to be able to help.
Correct.
Great. What other questions we got out there, guys?
if they pre-qualify, right, we're going from money, so people have to have money to do that, right?
Yes.
Okay, and for example, I don't like this color of this cabinet, but they're in good condition and looking good, decent. But she's so picky, she doesn't want it. The lender can turn it off, that proposition, or give it money. So if it's looking good, everything's,
So,
good, but the buyer picky on something and ask your help.
correct.
And
It's,
the lender turn it off.
And the
problem,
lender-
and do not give them money and say, no, we're not.
No, so the program isn't only for things that are like needed to make the home livable. So if they want to change paint or flooring or anything just to update it,
Uh-huh.
that's part of what's allowed for this. So if they just want to do this type of loan to make the house pretty, paint the cabinets,
Yeah.
any, what's the word I'm looking for? Like
update or,
to make it more visually appealing.
correct.
Even if it already functions great how it is, these programs are a great resource for that.
And just keep in mind that you can do whatever you want with it. It's just a matter of, does it appraise? But
Yeah.
even though when they sell it, they loved it, but the new customer does not, the buyer, it's okay as long as it's going to appraise and she can fund it. So it doesn't matter. It doesn't have to be dilapidated to where there's a lot of problems or anything like that. You can do whatever you need to do as long as the money's there to do it with the appraisal.
One more question. This might be a Darwin question, but is there anything special that we would have, any special language or addendum or anything we would have to add to a purchase agreement that might have, this renovation loan included?
Well, hold on with what you're telling me. You would still specify the type of loan.
Mhm.
So if it's an FHA 203K, you would specify that it's a 203K versus a 203B.
Yep.
I think, and a lot of people, by the way, aren't putting the 203B on, they're just putting an FHA. But there is a difference, and I think to make sure we're covering our buyers and that we're staying ethical, that we should state that it is a 203K. And an agent should know and understand that. So it's just the part of ethics, we're not hiding anything, we're being very open, and it really shouldn't raise any red flags outside of an agent getting educated as to what that really means to their seller.
And to be very honest, just to add a little extra layer of transparency to this, there is nothing in the underwriting process besides the type of appraisal, the fact that the appraisal is going to show after repair value, and the lender's reviewing the contractor, all the paperwork that they have to fill out. Sorry. That's the only difference in the process. So everything else is the exact same. There's no extra layers, extra requirements from the borrower, nothing additional to cause a delay. Again, aside from the paperwork he has to fill out, and then the appraiser having to do the after repair value.
So it's really a great question, because if you think about what would be different from the normal process, one, us having enough knowledge to be able to go, hey, this is the type of program, a call to you, Holley. Then the buyer says, yeah, I think I'd like to go after this. But before the offer, Wes, you come in.
Correct.
Then we find out, hey, do we even have the potential? We have to remember that we've got to have it appraised for the after repair value. So ARV, after repair value, which would be, again, something different from what we're used to thinking. And then make the offer with it stated as that it is an FHA 203K or whatever type of rehabilitation loan it would be.
Yep.
Correct.
But outside of that, it wouldn't be any different. So the delay really is just the time that normally we put an offer in, but now we've got to, hey, we think this would work. Talk to you, and then we've got to get you out there. So there
Yep.
might be a couple of days
Well,
delay
hopefully you
just
would
to
talk
get
to
the
me
offer.
first anyways. So the only addition to your process would be to get Wes involved, to have him look at the property and tell you how much he thinks it would cost.
So they got your information in there.
Correct. It does not have to be FHA. It can be a conventional renovation, a VA renovation. 203K is just the most common. So you'll hear people refer to that all the time, anytime there's a rehab loan. But it doesn't always mean FHA.
Well, any other questions, gang? Wow, they're quiet. So I'll stand up.
Quiet.
I'm gonna do this. So guys, Wes's and Holly's information is in here. Holly, you actually work out of our Shelby Township office.
I do,
is that
and
right?
Clinton, I
And
do.
Clinton also?
Yep.
So, just know you can always call into those two offices. You'll be able to reach into Holly.
Yep.
And really, it sounds like you're pretty much the first point of contact anyway with us.
Yes.
So if you
Yes.
think there's any possibility that you're working with a buyer like that, there she is. There's her information. I will get this posted onto the HRC Agent Development channel. And then with that, I'll make sure the information's in there.
We'll attach some flyers. We'll have Darwin attach some flyers.
And we'll get the PowerPoint out that Holly delivered today. So guys, thank you.
Thank you guys so much.
Awesome.
Thank you.
Much appreciated. And guys, you know, they gave their time, shared their knowledge. The best way to be able to say thank you, give them your business.
Referral.
All right, guys.
Thank you.
Thank you.